Okay, let's just jump right in. It's that time of year, and our goal today is simple. We're going to turn that annual tax season stress into a rock-solid game plan. We're talking about your 2025 taxes, the ones you'll be filing in early 2026. Let's get ahead of it and make sure you find every single dollar that belongs to you.
You gotta love this quote, right? Because it is just so true. That sound is practically a national holiday. It's that yearly dig where the past 12 months suddenly feel very, very real. But you know what? It doesn't have to be a panic.
Exactly. And look, if you're just doing what you did last year, you are almost certainly leaving money on the table. So in this explainer, we're going to unlock the whole system by really digging into one core concept. Once you get this, everything else just clicks.
Okay, this right here, this is probably the #1 thing people get wrong about Canadian taxes. So many of us think that getting a raise bumps all our money into a higher tax bracket. Nope, that is not how it works. Only the dollars you earned inside that new higher bracket get the higher rate. The layered cake idea is perfect. Your first slice is taxed low, the next a bit higher, and so on. Your total tax bill is just all those layers added up.
All right, so now that we've got that layered cake idea down, let's get to the good stuff. Let's talk about the good news for your 2025 tax return. There are some really positive changes that are designed to put more money right back where it belongs, in your pocket. So, you see this number, 14.5%, and you're probably wondering, what's that about? Well, this is the new blended federal tax rate for the lowest income bracket. See, the government cut the rate from 15% down to 14%, but it happened halfway through the year. So for this return, you get this blended rate. Next year, you'll feel the full 14%.
And the good news just keeps on coming. This number, $16,452, is your new basic personal amount for 2025. Just think of it as your own personal tax-free zone. Thanks to inflation, the first $16,500 you earn is all yours. The federal government doesn't touch it, as long as your income is under about $181K.
Okay, for all the parents out there, this one is huge. The Canada Child Benefit is some serious cash. And the most important thing to remember is this money is 100% tax-free. You don't report it as income, nothing. It's pure, direct support to help with the crazy costs of raising kids.
All right, if you are ever thinking about buying a home, you need to listen to this. The First Home Savings Account, or FSA, is, well, it's pretty much the holy grail of savings accounts. Why? Because you get the RRSP benefit, a tax deduction right now, and you get the TFSA benefit, completely tax-free withdrawals when you buy that first home. It is literally the best of both worlds.
Okay, so we've had the good news, but, it's not all sunshine and rainbows. It is just as important to know what's changed for the worse and what common traps can really cost you. Seriously, if you're not paying attention here, you could be in for a nasty surprise.
So I really want you to pay attention to this next part because it's a major shift from last year. A lot of families got used to a certain quarterly payment, and it's really important to understand that that has changed.
Yeah, you heard that right. Those quarterly Canada carbon rebate payments, they stopped. They're gone as of March 15th, 2025. So if you're counting on that deposit in April, it's not coming. For a family, that could be a $1,000 hole in your budget. The key takeaway is to adjust your cash flow expectations right now. Oh man, this next trap gets so many people every single year. Here's what happens. You log into your CRA account in January, you see a big number for your TFSA room, and you dump that much money in. The problem? That CRA number is dangerously out of date. The only way to be 100% sure you don't get hit with a penalty tax is to ignore the CRA's number early in the year and track it yourself. Use your own records.
Okay, quick little public service announcement here, but trust me, it's a super important one. The CRA now requires a backup way to log into your account. Do yourself a huge favor and set this up now before tax season really gets crazy. The absolute last thing you want is to be locked out when you're trying to file.
All right, now for the fun part. This is where we talk about strategies to actually get the biggest refund you're legally entitled to. This isn't just about paying what you owe, right? It's about claiming what is yours.
First things first, you gotta know the difference between these two tools. A deduction is like a chisel. It chips away at your total income before anyone even calculates the tax. It makes that layered cake smaller. A credit, on the other hand, is like a coupon you use at the very end. It just knocks money right off your final tax bill.
You would not believe how many families miss out on these. Yes, summer day camps absolutely count as childcare if it lets you go to work. And that gluten-free food for someone with celiac disease, you can claim the extra cost.
It might not seem like much per grocery run, but over a whole year, that can really add up.
Now this is where it gets really clever, especially for medical expenses. See, you can only claim them once they're over 3% of your income, which can be tough to hit on your own. So here's the pro move. You pool everything for the whole family, dental, prescriptions, glasses, everything, and claim it all on one person's return. By combining forces, you smash right through that threshold.
Okay, if there's a student in your life, your kid, your spouse, even you, this is an absolute goldmine. You have to file a tax return every single year you're in school, even if you made $0. This is how you bank those tuition credits. Then, when you land that first real job, you unleash that bank, and it can wipe out your entire tax bill. We're talking a potential mega refund.
Look, I get it. We've just thrown a ton of information at you. Brackets, credits, rules, traps. And honestly, this quote from our source material says it best. If at any point your eyes started to glaze over, that's totally fine. It's just your brain's way of telling you it might be time to call in a professional. So, we've covered a lot of the what and why today, but sometimes you just need an expert to handle the how. For those who want that kind of guidance, the source material for this explainer pointed to Mansour at Muneris Financial Services. Here's his contact info, and you can find more at muneris.com.
And last but not least, let's talk deadlines. Pull out your phone or your calendar because you do not want to miss these. March 2nd is your last day for RSP contributions for the 2025 tax year. April 30th is the big one for most people, file and pay. And if you're self-employed, you get a bit longer to file until June 15th, but watch out, you still have to pay up by April 30th.
So here's the bottom line. As you gear up for tax season, try to shift your thinking. This isn't just a chore, right? It's your annual financial checkup. It's an opportunity to take control, to claim everything you deserve, and to build a smarter plan for the future. It's a powerful tool, and now you're ready to use it.